Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics here today with me as we discuss one of the latest innovations from the Reserve Bank of India. And in case you are wondering what it is about, I'm going to tell you just in a moment from now. But before we do that, I'm going to request you once again to subscribe to Business Today Television and keep logging in for all the latest news and views that we bring you on a whole variety of subjects, including the markets and India's and the global economy. On today's episode of Easynomics, I'm going to talk about the central bank digital currency, or the e-rupee as many choose to call it. Now, what's the news trigger here? The news trigger really is the Reserve Bank of India, which is India's central bank, beginning trials of the CBDC. And this is something that had been announced almost 9 months back, and it came at the peak of the crypto frenzy. And at that stage, a lot of people were wondering, what is this Indian e-rupee going to be all about? We are still awaiting more details in terms of how the initial testing phase has panned out, whether there were glitches, was it as smoothly rolled out as the Reserve Bank had envisaged. But while that is a separate matter, let's once again delve into what are the key features of this CBDC and how is it different from digital payments, where you do all your transactions in an electronic format, not really exchanging paper currency or coins for that matter, and how is it going to make a difference in your daily life. Let's first take into account what is the concept behind the CBDC. And before I tell you about the details, I'll ask you to pay attention to the fact that the CBDC is something that's not really a global practice. It's not very well established. A handful of countries, by one account, around 10 countries, are at various stages of experimenting and trying to implement and come up with their version of the CBDC. There is frankly no global standard. And therefore, what China has been doing for the last 2 years, and remember, China also has a very substantially developed fintech ecosystem. It's been trying to do projects around their version of the yuan, the electronic yuan, for over 2 years. There are a couple of other countries, including, and this might surprise you, Jamaica and the Bahamas, which also have delved into their electronic version of their currencies. But what is the CBDC and how is it really different from the kind of electronic transactions, the e-transactions that you do? The first key difference is that the e-rupee, unlike any crypto currency, so-called allegedly a currency, is legal tender. What does legal tender mean? It essentially means that it is backed by a approved issuing authority. You know that not everyone can just get up and print currencies. Of course, there are games which involve the use of fake paper currencies, but that's not real currency. The CBDC, or India's e-rupee, is legally issued by the Reserve Bank of India, and it's still in trial phase. Do bear that in mind. Compare that with a cryptocurrency where you really don't know who the issuer is. Of course, there are dozens of platforms, including the most famous cryptocurrency of its kind, which is the Bitcoin, which is issued by private entities or entities which have floated by individual entrepreneurs. Many of them come together. There is still a lot of speculation about who is the person or entity behind Bitcoin, and there are various theories, many of them conspiracy theories, which float around on the internet. But that's the key difference. Any project of the kind that the RBI is doing essentially means that it is legal tender. It is backed by the state and the nation, for that matter. The second crucial difference that you have to remember, and this is the difference between CBDC and cryptocurrencies, is the value. Now, the e-rupee issued by the RBI and used in secondary market transactions in the initial part of the trial, which is essentially to reduce the cost of the bond transactions which are done by the Reserve Bank of India on behalf of the Government of India, very substantial amount. In fact, almost 14.2 lakh crore rupees is the borrowing that the central government is doing in the current financial year, and that's the central government securities market. In that, it's being tested out by the RBI. Now, the value of one e-rupee is equivalent practically, for our understanding's sake, to every physical currency rupee that is issued. There is no change in the value overnight or within hours or minutes or seconds as happens in cryptocurrencies. Cryptocurrencies, as we know, are extremely volatile, and a lot of people might object to me even calling them currencies, but let's leave that for another debate. The difference in the value of the e-rupee that is being tested by the RBI will be that every rupee, every 100 rupees, every 5,000, 10,000 rupees will be equivalent to the actual value of the physical currency. There will be no difference. The third element really is the difference between the e-rupee and digital payments. Now, many of you might say, how is it going to make a difference to my life? I already have a bank account and I log in electronically through the internet, through a dedicated portal. I receive funds into the account electronically. I actually don't go with a bag to collect that. And when I make payments, I do it electronically. I don't see any paper. And we've seen that over the past few years, the amount of paper currencies that we carry or use in our daily transactions, and in fact, in large transactions, it's almost mandatory now to not use currency in a way. You use checks, and now you do more of internet banking, various options that are available, legal options including RTGS, IMPS. All of that aside, the key point to remember here is that in a digital payment option, if you use a third-party app, you use Paytm, you use Google Pay, you might be one of those who is perhaps testing and trialing out WhatsApp payments. All of that is a third-party interface, which means any rupee, 10 rupees, 50 rupees, 100 rupees transaction that you might do on any of these apps, payment apps, is backed by a link to a bank account. That app allows you to transact, pay someone through that bank account. So there is actual money which is backing that, and that money resides in a bank account. The app is just a medium of transaction. It's an enabler. It's a platform that is doing it. Now, many banks in India have their own payment apps, so you don't even need to go to a third-party app for that matter. There is, of course, the most popular and one of the largest ones being Bheem, which is done by the National Payment Corporation of India. It's a very popular app. In my scheme of things, it's the most popular one that I use. So that's a key difference to remember. And if you look at the benefits of what might come on account of this e-rupee, the retail version of it, as per the information available at this point of time, the retail application of this CBDC or India's e-rupee is still some time away. Right now, it's being tested more in a wholesale market like government securities, where there is a massive amount of transactions that happens, and it's the belief of policymakers that using e-rupees will reduce the transaction costs. But look at it in another way. The Reserve Bank of India spent close to 5,000 crore rupees in the last financial year to print a whole lot of currency notes. And that is versus 2,000 odd crore that was there in the year 2008-2009. So the cost of actually printing that currency, and then there are of course secondary costs that are involved at the bank branch level, and the entire cost of physically transporting large volumes of currency. So ultimately, when you have a e-rupee which becomes popular, which becomes mainstream and starts replacing physical currency, you will see that there will be a significant benefit. Again, some of these details aren't very clear as to what is the timeline, how soon it will happen. But one thing is clear that we need to remember at this stage. The main difference really is the value. E-rupee is not going to suddenly fluctuate and become equivalent of 10 rupees or 100 rupees overnight. Neither is it going to disappear into thin air like some of those tokens disappeared in a matter of minutes and evaporate on the digital ether in some ways. So that's the fundamental difference, and the Reserve Bank of India doing these trials means that India joins a select list of countries which are going down that path, but it's going to take a lot of time. China's example is one of the biggest examples in front of us, but eventually, if it were to become mainstream, it will further enable the ease of transactions and hopefully lower the cost of transactions that are involved in the entire currency ecosystem. With that, it's a wrap on this explainer on India's e-rupee, the central bank digital currency. I'll be back with more. Till then, do stay tuned in. Goodbye.
If you like the video, do like, comment, share and subscribe.